Hey, welcome to the Airmere Roundtable. Today's the 2nd of November, 2022, FOMC Day. We have Troy McNeil from Option Omega on with us. And welcome, Troy. First time I've had you on here as a guest. So nice to have you here.
It's an honor to be here, Tom. I appreciate it.
And before we get too far into it, just a normal disclosure, Airmere is not a broker-dealer, investment advisor. It's for educational purposes only. Options, futures, bonds, and currencies all involve risks are not suitable for all investors. Past performance is not necessarily indicative of future results. If you want to read the whole disclosure, pause the recording or go to the bottom of any of our web pages. Then we also have an attribution slide that we use a lot of these tools, OptionView, OptionNet, Thinkorswim, Interactive Brokers. So just thank you for all those providers of services and data for us that we use. So I always like to have a shout out to them. So with that, let me stop sharing my screen and we can switch over to yours.
Okay.
Okay, so I'm seeing your screen. So again, welcome, Troy. And it's an interesting tool that you've got. And I'm sure our members will be interested in seeing what you've got and maybe what's in the kitchen that's you're cooking up for the future.
Sure. No, I appreciate being here. It's an honor. Yeah, just a quick background. My name's Troy McNeil. I've got two partners, Matt Simon and Rusty Mormon, and we're all option traders and been trading for a couple of years now, going on 7-8 years maybe. And as we started developing our trading, was kind of struggling with some of the backtests that we were finding. And we realized through time that what was the struggle was that most backtests are using end of day data. And so especially mechanical backtesting. And so they would check the price like at 350 every day, and that was it. And if you've ever put a shorter term trade on, you know that that's not how life works. Options can change, quite rapidly. So we come from a development background, so we started developing this tool for us, and it has kind of taken off. And a large part of the options trade community started using it just because we think it provides value. Did for us, and we hope for other people. So wanted to give kind of a quick demo today. And Tom, please stop me if there's any questions, or if you have any questions, feel free to just let me know. So,
yep.
But how this works is to create a backtest. Let's just start with a new backtest. We have data going back to 2013, and we use 1 minute market intervals. So we use 1 minute data, and we have some dates that people love testing, like the COVID crash. But like I said, you can go back to 2013. And we allow right now basically indexes. So you can do SPX by IWM or QQQ. There's some other ones that we're thinking through, but a large part of it is we wanted the most liquid markets in the world for this, especially for backtesting. We want very realistic data. And so we've stuck with those right now. And yeah, we might do some more later, but those are the ones we got right now. And then we have some common strategies that you can do, and we'll go through this here real quick. But basically, some normal strategies that people put on: straddles, strangles, calendars, butterflies, stuff like that. We'll just do a butterfly, for instance. Notice that it's changing there, these legs, as we go. And the way we set this up, it's a little confusing at first, but once you get it, I think you got it. Each one of these is a leg. And what is a leg? It's basically just like an option leg. You can sell, buy, call, or put. You have quantity. This field right here, we do a couple different things. You can do it by delta. So you could say, I want to sell a 5 delta put, 10 days out. You can also do it by percentage. You could say, I want to sell a put that's 1% out of the money, right? You could say, I want to sell a put that collects $4 of premium, right? Find the put that gets me at least $4. Or you could do it by strike offset and say, I want to sell the put that's 100 points away from where the market is on open. And if you do that strike offset, you can do it by current price, the day's open, the previous day's close. Right now, let's just do delta. And so you can sell a 25 delta put, and this little button right here allows you to link legs. And what that's good for is, say you're selling a spread, you could do a spread where you buy the put and you could do like a 5 delta or 10 delta. But a lot of times what we do is, when trading, is fixed width spreads. And so this 25 delta put, we could say, we're going to link this, and then we're going to buy the put that's 25 points below wherever this delta is, or we're going to buy it 10 points below, right? Or you could say, if you wanted to turn this into a debit spread, we want to do this 10 points above this delta. And so this is a quick way that allows you to link legs to where you can test some different stuff with that. And so for right now, let's just do this. Let's go to a butterfly. This is a 15-day butterfly. So we're selling 2 of the 50 delta at the money calls. We're buying the 63 delta call and the 35 delta call. And so, and this button right here basically means only open these up on days when there is a 15-day to expiration contract. If you don't have that on, the tester will try to find the closest to 15 days. And so, for the sake of this, we'll leave it on. Then we have an allocation section. And how this works basically is, if you've traded for any length of time, you know that how much money you put into a trade is part of the strategy itself. And so you can test different allocations. And so, for instance, you could say, I have a $100,000 account, and I want to put 3% of my capital towards this trade, and so it's going to do that. Or you could say, let's say 5% of my capital. The max open trades is, let's say, for instance, you had a book of trades you've put on where you're like selling a 60 or 90-day option, or a set of options 60 to 90 days out every day. And so you have this book of trades. You could say, well, I don't ever want to get more than 10 positions on this book at any one time. And we would limit it. It would just not put some on until that's closed out, until one of them is closed out. You could also, if you do this, prune the oldest trade. So you could say, well, instead of just not running a test, just take the oldest test off, the oldest trade off, win, lose, or draw, before putting this new one on. So you can test it that way. You could also limit this. And again, this is just to try to make it more realistic, because if you find a great test, it's like, I'm going to be a zillionaire. And then by the end of it, you notice that you're putting like 300,000 contracts on. That's probably not the most realistic. So you can limit this. You could say, I don't care how much money this trade makes. I'm only ever going to test it with 100 contracts, because I don't think I'd ever go past 100 contracts. And then we have entry conditions. So because we use 1 minute data, you can enter anytime between 9:32 a.m. and 3:59. We don't allow the first 2 minutes or the last minute, just because if you've traded during those times, you know that liquidity gets pretty wonky. So try to make it more realistic for you. And then your frequency is, you can trade this daily, meaning every day that there's a 15-day contract, we're going to put this on. You could do it weekly. So you could say, this is my Tuesday, Thursday butterfly. Or you could say, I'm going to do this monthly. I'm going to do the third Friday of the month to target OPEX. You could test trades that way. You can also use VIX environments. So you could say, I want to put this on if the VIX is at least 20, but I don't want to put it on if VIX is above 30. And you could test things that way. You could also use some technical indicators that we have. So we have RSI, min and max, and then we have moving averages. So you could say, I want it to be below one of these days, or I want it to be above one of these days. Or I can compare it. I want to do a crossover where the 2 is greater than the 5 or something like that. You can also use gaps, and gaps are useful just when the market moves a certain percentage from the previous close to the current open. So you could say, if the market has gapped up 0.5%, I want to try a trade out, or I want to try a trade out if the market has gapped down 1%, right? And you could test it that way. You can also use intraday movement. You could say, I want to put a trade on if the market intraday has moved 1%. So you can test certain market environments using it. And then if you're familiar with squeeze metrics, and I won't go into too much detail, but you can look it up at squeezemetrics.com. They have some models that are a little different from VIX and volatility based on dark pool prints, and then based on the overall gamma of the market. And you can trade based on those. So definitely read more about those if you're interested. And then we have profit and loss. And we have a basic, profit taken, stop taken. You can do this based on take 25% of the profit, take a fixed profit, or put a closing order in based on where you were at. Same thing with here, with the stop loss. And then for the stop loss and the profit actions, you can do a per leg stop loss. So you could say, this doesn't really apply to the butterfly, but you could say, target one leg of it. You can also use trailing stop losses. So you could affect that after a certain profit, you could go up, or you could do profit actions. So you could say, instead of this, I want to say at 10% profit, I want to close 25% of my allocation, and I want to adjust the stop to break even, basically. You could do it that way. You could add more. You could say at 20%, I want to take the other 25% off. So it gives you a chance to test taking off and scaling out of trades a little bit. Exit conditions. We have this button here, early exit, which means if you want to get out, say this is a, where are we at here? A 15-day butterfly. You say, I want to exit this trade when there's 7 days left to expiration. So I only want to be in this trade for 8 days. And you can also target the time you want to get out. You can also use technical indicators, the same as the entry conditions, get out at a certain point. You can also exit when the short leg is touched. So for instance, you could say we're selling a put spread. We could say, I want, when the short gets to this strike, the zero strike, meaning there, I want this to exit, right? Or if it blows through it, I want to exit. Or if it's 30 points away from it, I want to get out. Or you can test things and say, for instance, like with the butterfly, I want to get out if the market moves 50 points either direction. Either direction, I just want to get out and test that. So it gives you quite a few options for entry and exit, how to test certain environments. The one thing I'll show you too that I didn't think I showed you before, specific dates. You can also target certain days. So if you want to test all the FOMC days of this year or the last 2 or 3 years, you could do that. You could just put these dates in ISO formatted dates, and we will just trade those days. And that's pretty useful. Let me put this back to daily. So then on the miscellaneous section, we call this section kind of the punisher because we want to make this as realistic as possible. We want the test to we want to have confidence in our tests. So you can use commissions and fees per contract. You can say, I pay 2.5 on open, nothing on close, right? You can also add slippage. You could say, I want to assume that I'm going to have to pay on the entry and the exit within 2 cents. You can also ignore the wide bid and ask spread, and I can get the information too. I can't remember it off the top of my head, but basically there's a formula to say, is the market liquidity getting so crazy that you probably shouldn't trust this? If so, we'll ignore those for you. And if you traded during COVID, there's a lot of those dates are during COVID. You can also close the open trades on test completion, which basically means, say you have 30 tests it goes through it. You had 5 trades that were still open at the time of close. We'll just close those win, lose, or draw for you. And then you can cap your losses at a stop loss. For instance, if you were doing like a very theoretical, just credit spread trading type system, and you wanted to see what the theoretical stop loss would be, you could do that. And then you can also require 2 hits at the stop loss. You could say only exit the trades when the stop loss are hit for 2 consecutive time intervals. And just, again, to try to make it more realistic. You can also do that for profit targets too, if you have a profit target open. And then you can say, for instance, if you're selling a certain amount of premium, you say you're targeting $1 per spread. Well, you could say, no, I'm serious. I'm not going to put this trade on unless I get a minimum of $1 per spread, or whatever you're doing there. So it's just a way to try to make the test as accurate as possible with what you would do to real life. The short-long ratio basically is total short premium divided by the total long premium. And that's how some people trade. Some people find it very useful. There's more information we could give you for that. And then blackout days basically are days that you don't want to trade. So for instance, for every person who wants to put trades on FOMC, there's probably 3 people that don't want to put trades on FOMC days. And so you can black out those days. You can put those ISO formatted days in and ignore what days you would actually ignore in real life. And then finally, we have re-enter trades after exit. And basically what that means is win, lose, or draw, would you like to put this same trade on? And we give you some caveats to say, like, depending on time of day and things like that. A lot of people who trade really short-term trades have used that for like tranching and things like that. And so there's one way you could test it. So there's a lot there. There's a lot in it. And we'll run this. And so this is year to date. That's not a great trade, year to date. But I'll show you kind of what metrics you get when you run this. So you get the P&L, obviously. You get the compound annual growth rate, your max drawdown, and then your MAR ratio. MAR ratio is your annual growth rate divided by your drawdown. So you're getting a ratio of how well you're drawing down versus you're growing. Didn't win any of these trades. In fact, let's go to a test that's a little bit more appealing, just so we can show you some of those. So here's a save test. So this is a double calendar, basically. We can look at it here in a second, but your P&L, your CAGR, your drawdown, your MAR ratio, we give you the percentage of time that you won. We give you how much premium you basically paid or collected, depending on if it's a debit or a credit spread, and how much of that you captured. And some people like those type of metrics. Your starting capital in this theoretical fund and your ending capital in this theoretical fund. And then you get your average per trade, your average winner, your average loser, your max winner, your max loser. And we'll show you how long on average you were in the trade. And then your trades divided by your winners, basically. Give you some graphs to show you this is year to date, so the annualized return doesn't really matter too much. But then we give you a trade log. And the trade log is super helpful because basically what you can do is, first off, you can adjust a lot of these to what you see on the win or on the trade log. But what we do is we show you when this would have opened, your opening price of the underlying, so this would be SPX, how many contracts you did, 5 of this type, based on the allocation you had, your premium, your closing price of the underlying when it closed, and your the time of day that it was exited, and then your closing cost, and then we'll give you the reason that we closed it. So you hit your profit target here. And then what's really interesting and helps you kind of in your testing further is we'll tell you how low you got during this trade and how high you got there in this trade. So your max profit was 25%. The trade here is 25% profit, so that's as high as you got. but you got 16% down on the trade, right? On this loser, you were down 33% at the low. So it gives you a way to kind of put some maybe future parameters in when testing. Any questions?
I don't see any in the chat.
Okay, great. So let's play around with this test a little bit just to show you a little bit more. So, also you can download this as a CSV if you wanted to further test. So when you're doing this, when you open a test, we'll load all the stuff in there for you so you can just quickly get back to it. One of the interesting things is if you notice here, the P&L is crazy, the CAGR is crazy. You say, well, that's unrealistic. Well, one thing you could do is you could say, well, let's just test one. Let's just see if we had just put one of these on through time this year, year to date, how you would do. It takes away all the allocation stuff. It takes away all the fun and games of allocation, and it just gives you a straight shot if you were just doing one-offs, right? And this is very helpful as well because it gives you a little bit more metrics about, you know, what could you have expected short of your putting allocation in. What's interesting about this is most back testers in there, and one of the things, because we're traders, most people don't trade just one strategy. They do a couple different strategies. So to that, we created a concept called portfolios. And what a portfolio is basically is an ability for you can add a bunch of tests together and get some more metrics about it. So you could say, let's say we're starting with $100,000. We're gonna do this year to date. And we want to look up this morning double calendar that we did a while ago. And we want to do a hedge with it. Let's say when the VIX is between 12 and 16, although it's not been that this year. So let's do, I don't remember what this is, but let's just do that. We're going to say 10% of our portfolio is in this. And then we have this other one. So we have the morning double calendar, and we have this simple hedge. And those are the two. Obviously, you can just click through these, but you can also just target certain ones if you want. And so here we're going to put 25% of our capital, and we're going to put 10% of our capital in this hedge. So we're using 35% of our capital in this $100,000 account year to date. And we want to run these tests together. And so we will run these together. Obviously, it didn't work well. That hedge doesn't do anything for you. But what we do is we give you a daily log of all of these. And we give you your portfolio versus the SPX, or whatever the underlying was. Let's do another one just to be more fun, to have just losers. Actually, let's just do this real quick. Let's look at this hedge, or this trade. So these are 0 day. This is a portfolio of 0 day trades. And we're putting 100% of our allocation. Don't do this, obviously, it's stupid, but for testing purposes. So we have these 3 strategies: a broken wing butterfly, 0 day butterfly, broken wing butterfly, a 0 day, 1 day double calendar, and then a weird put calendar, kind of a calendar condor type thing, or calendar spread type thing. These 3 trades. And so you say, well, what would they look like if we did it together this year? And we give you, this graph particularly is helpful when you're looking at multiple trades. So it gives you a sense of how you would do. You have your CAGR still. And then we give you a trade log of all the trades. And that, we have found that to be very useful when you're combining trades that maybe complement each other. Maybe you find out they don't complement each other. Maybe they're too similar, you know, in drawdown and things like that. So it's a way to build out portfolio in your trading, specific with options too, and just try different things, which we have found to be useful. So yeah, that's a quick rundown of it. If anyone has any questions, happy to answer those.
I know we have quite a few people doing like a zero DTE opening range breakout, and I think you said you were kind of working on something to address that.
Yeah, we haven't put anything in yet that's doing an opening range breakout, but those are on the list of things to do. So the closest, would be on the open if the market has gapped up. A lot of it would be the equivalent would be trying to think. Say you're doing, let's clear all this out real quick. This isn't the same trade, I recognize, but let's just, for the sake of it, we want to use gaps. And we want to say, if on a gap up, we want to play the fade. We want to play the, the return to the mean. So if the market has gapped up under, at least 0.5%, but not more than 1%, we want to, I don't know if this is going to work or not, but we want to buy a put spread. We're gonna buy the 50 delta, and we're gonna sell one that's 25 points away. All right. So you could test that. You could say, I want to get out at, just to see what happens, get out at the profit target. Again, I don't know if this will work, but it gives you just an idea of how it would do. So that strategy didn't work, playing the mean on the upside this year.
Were you setting up a bearish trade?
Yeah. So you would be buying. So if the market's gapped up, you want to fade it, basically.
Okay,
this would be this type of thing. What's interesting about that, though, is it actually does give you some ideas, because I look at this and I say, oh, well, it actually did win a lot, but the problem is we held on to it too long, right? Because you have this early win percentage. So maybe we go in and we say, that we want to use an early exit. First off, we're using 0 days. We want to use an early exit, and we want to get out by 10:30 in the morning.
And these are Eastern times?
Yeah, these are market times, sorry. Yeah, so Eastern Standard. Let's see if that improves it. That just takes your win rate down a little bit. So it gives you some ideas to where you could look at this and say, okay, well, these it just blew out because it kept going up, basically. And so you start trying to target things in different ways there, if that makes sense. So, but
like a stop loss kind of thing.
Yeah, do a stop loss. Get out at like a 20% stop loss. Let's see if that works. That doesn't work. Also, you could say, let's see. We could do. This is a fun one. Let's take the profit target off and say 20%, and we're also not going to put $5,000. We're not going to put $5,000 per trade. We're going to use 25% of our trade. That's getting a little better, right? So it's an interesting way to test it, to say, like, I want to test that strategy. I want to test just buying basically puts if the market gaps up on a fade, to fade it, or vice versa. If the market gap down, you could do calls, and then testing those strategies. But to the question of like the opening range background, that's something that we are thinking through and trying to perhaps look at for the future.
I think you said you're working on a big update for the last couple months of the year, and then early next year come out with a updated version.
Yeah, we're working on. Yeah, we're always updating. So we have a pretty big feature coming out next week. That well, I'll give you guys the secret sauce. Basically, where you can upload your own CSVs. So if you have your own kind of signal service that you subscribe to or you have or something like that, it'll be a way for you to test option strategies using that signal service. So we think that's going to be pretty cool. And then we have some pretty big features in the future concerning like technical analysis. We feel pretty good that this is mechanical. They're like the best mechanical backtester in the world. But the next steps is to kind of target different types of people who trade options that might not use mechanical strategy. So perhaps more bespoke adjustments through time and stuff like that. And we've done a lot in the last 9 months since we launched, but we're looking forward next year to doing a lot more.
Well, cool.
So, but yeah, I appreciate it. And then one thing is, if you are a user of Option Omega, you can share these tests. So for instance, let me go back to this one that we had saved already. With this link, when you click that and save it, you get this link here, and you can actually share that. And so anybody, I'll put it in the chat. Like if you're a user at Option Omega, you can open that up. So a lot of people trade and share ideas all day, which is super helpful. So we have that ability for you to do it.
So that's not a public share. That's only if you're a customer.
Yeah, only if you're a customer.
Okay. Oh, it's pretty fast. I mean, I was involved with Quanti Carlo, which is basically trying to do a similar idea. They had all the market data. I remember Larry spent like $45,000 with CPOE to get all the market data for as far back as he could get. But it was so complicated, and they were making their own icon, so nobody knew whatever anything was intuitively, and it was just a mess. But then Gammon Capital bought it, and it kind of died. But they wanted the data and the IP. But this is what Quanti Carlo should have been. Something that's intuitive, easy to see, easy to change, quick. It's all the kind of stuff you're looking for in a back tester. And like you said, adding more capabilities as you go. You're pretty young. I mean, just this year, right? You launched?
Yeah, we launched in March.
Yeah, so lots of potential. CML Viz Trade Machine is kind of like this, but it's obviously different. But they're same process of evolving, and I see you guys catching up or beating them because your tests run way faster, and I think it's more granular. But really interesting product, and I hope to see more and more improvements as time goes by.
Yeah, sure thing. Yeah, no, we'll definitely keep you updated. I appreciate you giving the chance to kind of show it off a little bit. Yeah, we're trying to iterate pretty fast. We're a small team, but like I said, we are all option traders. We trade every day, and so we update it as we kind of both pretty large community. So when people reach out, we try to pay attention to that, but also honestly, when we find something useful for our own benefit, we put it in there pretty quick, just because we're using this tool every day too.
Right. And I put the link in the chat. I'll put it in the recording too, also on YouTube. So if people want to join, they can have an easy way to jump in.
Sure thing. Yeah. All right. Yeah, we have a discount for your users. So usually it's $100 a month or $600 a year, but your users get their first year for $50 a month or $300 for the whole year. So using that link.
Nice. All right. Well, I don't see any more questions, or is there anything else you want to mention before we wrap it up?
No, it looks great. I appreciate you letting me show it off, and it's an honor to be with you guys today.
Okay, and Troy's kind of a birds of a feather with me as a developer, so it's always a pleasure to have another coder on. So it's nice to have you, Troy.
I appreciate it. Yeah, I get to talk shop a little bit.
Yeah, absolutely. All right, so I'll end the recording here and get this posted as soon as I can. And yeah, thanks very much, Troy, for the peek behind the curtain.
Thank you, Tom. Appreciate it.
All right, we'll see you.
See you soon.